Welcome back, delegates. Moving ahead, the banking, financial services, and insurance industry is the backbone of the economy, and it is very important for the growth and sustainability of a developing economy like India. So, join us for an intriguing panel discussion on BFSI 2.0. We are honored to have a distinguished panel this year, which, in a fundamental sense, needs no introduction. Please welcome our panelists, Mr. Tamal Bandyopadhyay. Sir is one
Thank,
of the most respected business journalists in India. His weekly column, Banker's Trust, now in Business Standard and previously in Mint, is widely read for its deep insights into the world of finance and its unerring ability to anticipate major policy moves. Tamal sir is one of the best in the business when it comes to the in-depth knowledge and analysis in financial sector in general. Next, we have with us Dr. Charan Singh. Sir is currently serving as the non-executive chairman of Punjab and Sindh Bank. Sir was a full-time visiting faculty and a former RBI chair professor at the Indian Institute of Management, Bangalore, India, where he taught comparative monetary policy and policy issues in the Indian economy. We also have with us Mr. Vetri Subramaniam. Sir is the group president and head of equity at UTI Asset Management Company Limited. He has extensive experience in the Indian equity market, having previously been involved with various big companies. Sir is also a frequent contributor to the media and regularly speaks on equities and investing at various forums. And the panel will be moderated by none other than Mr. Kundan Kishore. Sir is currently building a personal finance platform named Wellion for Indians. He dwells deep into the intricacies of things. Sir is doing an amazing job trying to spread awareness about the stock market and creating an ecosystem of sound financial professionals in India. We don't want to keep you waiting anymore. I request Mr. Kundan Kishore to continue with our powerful panel.
thank you, Adya. And it's really a pleasure having all three distinguished guests and moderating this session. So before we start this discussion, let me set the agenda. This has been called by young graduates or going to be graduates, and we all are going to spend 45 minutes with each other. So the best way we can, or the best thing which we can take out from all these 45 minutes is not a very heated or debated discussion on what exactly is the banking or how it's going to shape, but something what you all and including me can learn from their experiences. So the way I have decided is I spoke to all of them yesterday and tried to understand their area of work. And what we have decided is ask them very upfront questions based on certain scenarios so that they can share their experience and let us know that how exactly things are shaping up in BFSI segment. Apart from that, the agenda here in this meeting is also to give you students one overview about the future or how future is going to shape as per these three gentlemen so that you people can prepare yourself in the best fashion to come and serve in this great industry of BFSI. So I would like to open this discussion by asking Mr. Charan about see, this pandemic is going on. You guys are all in Bombay, and we heard that cases are still high there. So I would like to ask Dr. Charan that how do he see that how the existing banking industry has responded to the COVID situations or the different business scenarios altogether. On that note, we will start the discussion and we will see that how strongly, as per Mr. Charan, the banking industry has responded. And that will probably set up the agenda that how good this industry is right now placed to tackle all the issues of BFSI or all the fintechs which are there already doing this, transformations and trying to give some challenge to the BFSI. So, Dr. Charan, your inputs, please.
Good morning, and first of all, let me thank you and Simonji to invite me to come and speak to the students. It's always a privilege to speak to bright students. I've been a professor at IIM Bangalore, and I tell you, I used to wait for my classes. It's not how much you teach them, it's how much you learn from them. Because each one is so bright, and when they ask you questions, it's much more the satisfaction, the intellectual curiosity is satisfied, and therefore the intellectual satisfaction is so immense that I always used to think it's far more than the salary that I get paid. So if ever given a chance to speak to students without getting salary, I still love to do it because that is where the intellectual stimulation comes for anybody. So thanks to get me over and speak to all of you. I look forward to your questions and your inputs. As far as the question is concerned that has just been posed to me, COVID has been, to my mind, a great turning point in Indian banking history. And why do I say that? There have been different turning points in Indian banking history. The first, of course, was nationalization of the Reserve Bank in 1940s, and then nationalization of State Bank of India in 1950s, 55 to be precise, nationalization of commercial banks in 69 and 80. These were the turning points. And then when the Jandan happened in 2014, within no time, nearly 40 crore accounts were opened, fresh accounts were opened at places where nobody would go and open accounts earlier. That was another turning point. But what COVID did, changed the banking scenario. Now, what do I mean by it? For a long time, we were thinking of technology penetration in banking. Bank to us was a brick and mortar branch. And today, when COVID happened, we couldn't leave our homes and we had to pay for the services and goods. And what do we do now? And though the infrastructure was there, a threshold level of services through the jam trinity, as they say, through the cell phones was already there, but nobody was using. There were fears in the mind of everyone. How strong are the firewalls? If I transact business through my cell phone, will my account be exposed to people and make it very vulnerable? And so frauds can take place. All sort of fears were there. And 1 year of lockdown and whatever restrictions, what do you find today? People are using electronic devices for banking. Do you really need the brick and mortar branch now? I'm not sure. In last 1 year, how many people would have gone to their brick and mortar branch? But they've got the account statements, they have transacted business, payments have been done, money has been received, everything is happening smoothly. Can you imagine in a country like ours, where English literacy level is less than 10%, the cell phones with English numerals are able to transact business from small carts. You go and buy samosa from a cart who comes and stays there from evening 5 to 8 o'clock. And he also has a little Paytm display and you position your phone and make the payment. Can you imagine this 1 year back? No. So I think the transformation of the Indian banking sector, and that's why I say the turning point has come. And that turning point is the young and old, literate and illiterate, everybody has started getting used to banking, which is very good, and used to digital banking, which is very, very good. So I think in the days to come, I'm not sure if brick and mortar branches would be required, and if required, one in a city should be more than sufficient. And I'm not sure if ATMs are required, and if required, maybe we don't need cluster of ATMs as we have them now. So it's going to be technology-driven banking in the days to come. That is one. The other thing which I want to flag with you, dear students, is banking is changing. And when we say banking is changing, what is really changing? On one hand, we have commercial banks with which you and me are quite familiar. But if you look at the trend in advanced countries, there are non-banking finance companies. Not one-to-one, but similar. They can be called as shadow banks. Shadow banks in a country like America are almost equivalent to commercial banks.
So there where, sir, I would like to ask you to take a small pause here. So the whole point of discussion about this BFSI 2.0 is, it is said that the gap line between the fintech, what you calling in US is the shadow banks, here fintechs are probably doing the similar role, and the bank is blurring day by day. I mean, the gap line between them. So how do you think are the fintechs different from bank, and are they changing the structure of the financial services? So this is the topic of our discussion today. And as you rightly said, that existing banking infrastructure has responded really well against the new business scenarios, which has created out of the COVID situation. So as for you, if I can translate your words correctly, banks are fully prepared to handle any kind of disruption, or whatever the disruption has happened in the business scenario, they have responded really well. So is this something you wanted to say, sir? I mean, this is how you want to rate the banks, that they are fully prepared, they are digitalized already, and they have responded really well.
So yes, partly what you have summarized is true.
Okay.
Partly, I think the landscape is open now. The Indian commercial banks will have to take into account the non-banking finance companies and take them together if we want to achieve a $5 trillion economy.
All right.
I feel that the non-banking finance companies, they will have to get used to fintech. Many of them are yet not prepared. Banks are to some extent, but NBFCs are not. So I think that is where the strength has to be now deployed, so that the NBFCs match the readiness of the commercial banks if we have to march towards the $5 trillion economy. And the time that we have is not much. Worldwide, the trend has changed. India will have to match it, both from the angle of costing and technology. The banking penetration will have to rely on fintech. And I think that is the way forward.
All right. Thank you, Mr. Charan. And there where we have Mr. Tamal, who would give us light upon one bank which is having the largest or highest market capitalization at the moment. And he has written one book on that, HDFC 2.0, among other books also. So probably Mr. Tamal, not probably, I'm sorry to use that word, but Tamal has already investigated on that bank and have seen that transformation of that bank, which is right now the largest bank as per the market capitalization. So he has seen that transformation within one bank, where one bank has gone fully digitalized. I'm also one of the customer for that bank. And I can see that bank also from very close quarter. I can see that they have really digitalized all their platforms really well. I'm talking about HDFC Bank. So do you see, sir, the similar thing? Can I see that HDFC Bank is probably one bank which is the representation of all other banks together, and this is how other banks are also responding. So maybe you can give your input that how did you have observed that transformation within that bank, and do you see that the whole banking industry is going to transform the same way, or are they really going to face a lot of issues from the new fintechs, which are investing almost 4 times the budget which is a normal bank spend on the technology? So what are your take there, sir?
Yeah, uh, it's a very large question. You have three parts of it. One is the HDFC story. Second is what the other banks are doing. And third is can they actually withstand the onslaught the fintechs are doing. So quickly, HDFC story is the other side of it. Let me not be a marketing guy for HDFC Bank. You must have seen that they were wrapped by Reserve Bank of India for certain faults. Their technology issues had some problem, and they were asked not to get no to fix all the problems. And they are penalized by Reserve Bank of India. So that's the other side of it. Yes, you go fintech, you go digital, all, but there has to be checks and balances. And when you are an HDFC Bank, it's the largest in terms of not only in the market cap, but in terms of digitalization. And there are certain issues which are being addressed too. That does not take away the credit from the bank, but I'm just telling you the other side of it. Now, HDFC Bank is a unique story because they did see it is coming and they decided to disrupt themselves. Instead of waiting to be disrupted, you want to disrupt. And all this fintech, etc., what they do, technically they work on the OTT model, which means you need something to ride on. Now that it is the choice of the bank whether I would allow anybody else to ride on my infrastructure or my superstructure, or I will do it myself. So HDFC Bank decided to do it itself. That's all. I mean, it's very different. And one advantage is this, as I said, the fintechs do not have the customer base. Bank has the customer. So by itself, what can fintech do? To give you a very loose simile, you can have a best of kitchen, where you have the best of spices, the weighing machine, everything else, and you get a great chef, and ask this fellow to make chicken curry or paneer bhurji, whatever it is. Can he make it without chicken or without paneer? He cannot. So similarly, you can have the best of infrastructure, everything, but still you cannot go ahead unless you have the chicken and paneer, in this case, unless you have the customers. Now, who has the customers? The banks have the customers. So HDFC Bank realized that, look, I have the customer base. I would not allow them to ride on me and using my customer base. You can have the best of kitchen, but I have the chicken. I'll not allow my chicken to get into you. So that's what they reached out, and they form alliances, and they worked on it. Okay, that's the HDFC Bank story. They were ahead of others. But does that mean the other banks are not doing it? I think at least I can think of State Bank of India. Despite its such a large size, much bigger than HDFC Bank, but it has done remarkable progress on the digital side over the last few years. I would think of Bank of Baroda. Again, it has done a remarkable progress. This thing. Similarly, you think of in that space, Axis Bank or ICICI, Yes Bank. I think there's a change. There's a difference in degree what there could be. I mean, in terms of, if you look at the final data, the transactions, non-branch transactions, there could be somebody's in 19 and somebody's in 80s. State Bank of India said it's 67% and all, but all of them are going, barring some of those old private banks and some of the public sector banks, which are like sort of an identity crisis for them. Will they be privatized? Will they remain alone? Will they be part of the consolidation and all? They are not moving fast. But if you see the banks who matter in the financial sector at this point of time, it's not a question of whether we want to do it or not. You have no choice but to do it. So that's definitely is happening. And what demonetization could not do, demonetization gave a push to digitalization, but there it ended. But now this COVID, I'm not talking about the asset quality and other, that's a separate story altogether. And the soul of banking is separate, but the body of banking is certainly changing at a much faster pace. What Nandan Nilekani said, that what would have actually got done in years, now it's happening in weeks, because they have no choice. And final thing, you said that other banks feeling too much challenged of fintechs, and are they losing their ground scared? I don't think so. I think it's a question of, in Indian context, I think it's a question of largely will be alliances. It's not fintechs on their own. We have seen that the loans sold on portals, what happened, RBI came down again. There are a lot of things which should not have been done and all. So I think it's an era of alliances, which already started, but it will be now far more strengthened. And there will be banks will decide who to tie up, who not to tie up. Even under fintech, there is a Me Too. It's a fintech has become a sort of garage movement. Every second garage, you find somebody's coming up and somebody saying, I'm unique. On a given day, I might be meeting either Zoom meeting or interacting 2-3 fintech guys, and each of them claim they are unique. So it's a big challenge for bank also, who to choose, who not to choose, and how many of them will survive. Having said that, I'm not being sarcastic, or I'm not being negative about it. This movement is very critical, very needed. But I don't see the fintechs are taking away everything for the banks. I see their payment space. Yes, they are in the payment space. They are doing. In fact, in the payment space, India is probably the most exciting geography globally. What's happening? We can discuss that later. But if you talk about banking, no, there has to be alliances. That's what's happening. And finally, I don't think we will see a situation in India, even in the next 5 years, that the branches are not there anymore. Branches, the formation of branches will be changing. We are talking about the stock, but the new banks will be coming. How do you create trust? How do you build trust? You need to have a physical presence. So I think the branches will be there, but in a different format. We can discuss it later, given the time. Thank you.
Thanks a lot, Mr. Tamal, and thanks for the candid reply, which is like you already said that fintechs are not the threat for the existing banks. They rather have to choose them and make them, partner with them, and that's how fintech can survive rather. And I saw Mr. Vetri smiling on that as well. So, which was like a discussion where I can see that we all are already probably thinking about, yes, banks are fully prepared, fintechs are not going to disrupt. And unfortunately, right now, we have no one representing in this panel from the fintech side. So probably I myself will come back to you once I have discussed with Mr. Vetri about his industry, where I would like to add few points on the side of fintechs, where they are starting and probably one day they can also become the banks. And they are probably going into that track where they are specializing into things. And bank means trust. So I'll come back on this topic, but then before that, I would like to pull in Mr. Vetri with his expertise on investments and markets. Recently, Sensex touched 52.5K, and one of the largest fund or asset management company he's associated with right now. And the question which I have from you, Mr. Vetri, is about your industry. So in developed nations, we have seen few startups who have bought on the cost of fund management really low, and they give access to the retail customers there so that they can come and participate in the market without giving high fee. Now, the similar threat I can see here in India for the asset management companies, which are part of the banks again. Now, how do you see at it? Whether you are still believing that you will be probably placed where you will be giving better valuable services and still charging what you are charging, or are you also reconsidering and going with the flow where low fund management cost and better technology will be implemented even within the asset management arm of the banks? So your inputs there, Mr. Vetri.
Sure. Thanks a lot, Kundan. And you're right, I was smiling. So actually what I'm going to first do is jump into the previous debate before I come back into my domain, which is asset management.
Sure.
But very quickly, I think what we need to recognize, and I think Tamal put this beautifully when he talked about the alliances and about the trust and the relationship angle. I think when we look at banking and financial services, there are two parts to it. One is the liability part of the relationship, which I think is driven by trust. And the second is the lending part of the relationship, which in cases of the traditional financial institutions has been built around their knowledge of the customer and the relationship. I think what the fintechs are doing, and they're doing a fantastic job of this, is that they're actually saying, I may not know the individual, but can I scrape together data from the wider ecosystem such that at the point of origination of a transaction, I am able to offer a credit product or a payment product to that customer just based on the database that I have scraped about him from the internet, right? So I think this is a skill set that they have demonstrated fabulously. And I think the banks will need to learn this. I think if the banks stay focused on just cross-selling to their liability customers based on relationship, they are going to run into a problem. Similarly, for the fintechs, unfortunately, the challenge is that this is only one side of the business. Banking is a balance sheet business. You cannot think only about the lending side of it. You have to also worry about the liability side of it. And that is where I believe eventually the word that Kamal used, the alliances, will become a lot more potent. And maybe 10 years out, we won't think of these as being two different silos. So, that's my perspective on what the fintechs are doing well. and what the banks are doing well. Coming to asset management, Kundan, and your question related to that, let me put it this way. I think the active fund management industry in India has been growing dramatically. And why do people come to active fund managers? They come to us because they believe that we can give them an additional return, what we in industry parlance call alpha, over and above the return of the benchmark. Now, unfortunately, over a period of time, there is such a large number of products on the shelves. Uh, Investors face two challenges. They don't know which product to choose. Secondly, while they have data available to the past, they actually don't know which of these products can actually do well in the future and generate that alpha. It's actually the problem of having too much choice. The second challenge, as the market evolves, there are more and more institutional players who are competing against each other to generate alpha. Now, it's very important to remember as students of finance that equity markets are not a zero-sum game in terms of the aggregate returns. But alpha, which is the spread over the benchmark, is a zero-sum game. For me to have alpha, some other active participant in the market has to have a negative alpha. So as the market gets more evolved, as you see more and more institutional players competing against each other as active managers, you have a challenge for investors, one of being able to choose correctly, and secondly, the fact that alpha is a zero-sum game. That is where we have gradually seen that as markets have evolved in the US, you have seen the rise of passive investing with investors saying, look, I'm happy to get the benchmark return because all I'm interested in is achieving my financial goals. This is not about becoming the next Warren Buffett or the next Rakesh Jhunjhunwala and becoming a millionaire in the stock market. The reason I'm investing is for my financial goals. If at a very low cost, I'm assured of the benchmark return, I avoid the problem of hindsight, I avoid the problem of too much choice, and I get to my destination in terms of my goals. So I believe these two will coexist. Perhaps our market is a little bit more nascent. There are changes that need to take place in the regulatory architecture as well. But eventually, I do believe that in India as well, it will not be a case of passive versus active, but both will coexist. And the industry structure, Kundan, will actually resemble the typical barbell that you see in any gym that you go to and you work out with. What do I mean by that? It's a thin bar in the middle, and at the two extremes, you have significant revenue pools. One revenue pool will be the large volume, low fee, passive products, and at the other extreme, you will have high fee paying products but much smaller volume. But because of the high fee, it becomes a large revenue pool. And that pool will increasingly migrate towards some sophisticated active products, including the whole category of what we call alternate investing and hedge funds and alternate investment funds and so on and so forth. So I think we really see ourselves as an asset manager, and we would like to position ourselves as an asset manager across the spectrum, making sure that we will always have the product offerings for customers who are looking at those two ends of the barbell, because those will become the dominant revenue pools. So I think it's a question of both, and it's only a question of where we are in our stage of evolution.
Rightly said, Mr. Vetri. However, what I also believe, I just also want to add 2 cents here that I'm a firm believer of efficient market hypothesis, where the more mature economy or the better you are placed, generating that alpha will be more difficult. And the only place where you can probably have a better return or meet your financial goal is by keeping the fund management cost low. So there where the efficient market hypothesis come. So I mean, you still believe that in retail segment we can still have high fee product. So I believe that this alpha will be present here for more years, and our market is yet to become that efficient and have so many small cap and mid cap stories which is yet to be found. I would like to believe in that part of it. So thank you for your inputs. And here I would like to, also ask Naveen and other people if they have any questions from the student side, because this is something where I would like them also to ask any question if they have from you. If not, then probably I'll chip in. So Naveen and Adya, do you have any question from your side which you would like to ask from the distinguished guest? All right. So maybe by the time the question will come, Mr. Vetri, I would like you only to continue and give some career advice to these students in terms of if they are planning to land into the asset management only. So what exactly they should. So I have seen, I have been through that transformation also, that there was a time that 90% of the traders on institutional desk were, I mean, 100% was human, but then algo took over, and probably the team size has to come down. So these guys have to prepare themselves for future as well. So what should they focus on? The typical finding that alpha and or becoming more on the fintech side, learning more technology even though they are business graduates. How do you want to advise them?
Sure. So again, Kundan, I'm actually of the opinion again that it's not either or. I think it's a question of where your skill sets are and where you think you can best utilize them. As I said, there will continue to be an active fund management industry because the rewards are disproportionate, but only few will be successful. And therefore, there will always be opportunities there for you to try and see if you can be one of those successful people. In terms of skill sets, Kundan, I think it's my experience, and we've had a lot of younger people over the years. I myself started out, of course, a very, very long time ago, almost 28 years ago. But I think I find too many analysts or younger people who start out as analysts actually focused on what they see as the most exciting part of the job, which is really modeling company financials with Excel. Now, in a sense, this is the bread and butter of any investment analyst to create a financial model. But my recommendation to most analysts would be that actually go back to the basics. And the basics are nothing but actually reading and analyzing 10 years of annual reports of the company that you plan to invest in or you plan to evaluate. That is the building block. There is too much excitement about the forecasting piece, but believe me, at the end of 28 years, I can say with great degree of confidence, nobody can forecast the future, neither when it is improving nor when it is going to deteriorate. The best starting point for any analyst is actually just the hard work of going through 10 years of annual reports to understand how this company has navigated cycles, how its cost structure moves through cycles, how it reinvests in its core business, and so on and so forth. The second skill that actually I'm finding increasingly, Kundan, is becoming very, very important is that even more than Excel skills, I had to learn Excel when I started my career. Today, I'm increasingly finding that the key skill is not Excel. It is actually the ability to deal with large data sets. And therefore, the younger people that I'm meeting increasingly actually come and tell me that, we can do things with Python. We can, run those algorithms, scrape data off the internet. We can run various, checks and evaluations through it. So increasingly, I am finding that simple skills related to data analysis, which typically involve some programming knowledge, are becoming very, very key. Doesn't matter whether you're in the active space or you're going into the fintech space. So I would point to these two, just that hard work of going through annual reports, and secondly, building some programming knowledge for yourself as key elements, whether you go into the fintech world or whether you go into traditional asset management.
So one common question I have from all of you now, I independently ask the questions from you. So banking means trust, okay? And so whether fintech will overpower the banks or not is one discussion which we already have. But then we have seen certain scenarios and events where banks have somewhere played with the trust of its customers. Be it the story of few small banks which got defaulted, or be it the story of Yes Bank, which finally was bailed out. So what do you think how our banks are placed at in terms of handling the trust of the customers? And I want an input starting with Mr. Charan on this topic, and maybe a brief 2 minutes from each one of you.
Thank you so much. It has been so exciting a journey, 15, 20 minutes. I've heard both the panelists, very, very interesting. As far as your current question is that how do you ensure that the trust is maintained? Yes, I agree with you. trust is the most important factor at both the places. The depositor has to come and place the money with you. If he doesn't have trust with you, he'll not like to place the money with you. As a bank, I also need trust. I need to know this customer of mine, what type of money is he bringing to me? Will I get in trouble if I use this money? And I also need trust from the person to whom I lend. Because the borrower, what is he going to do with my money? I'm actually the custodian of trust of the depositor, and I have to live up to the expectation of the depositor, because when he comes and puts money in me, he wants that level of confidence that 10 years later, if he comes, he'll still have the money with him. So therefore, I need trust from the borrower who borrows from me, that he'll not go and squander away my money. He will not do something with the money, the purpose which I do not know. And he will use the money in a way that is productive, so that for the course of the loan, I keep getting my interest, which I will keep paying the depositor. So it's a game of trust. As you said, a few banks might have betrayed the trust. Even there, I will give them the benefit of doubt. Sometimes you do some activity thinking it will pay you returns. Sometimes in your exuberance, you could become adventurous and take some additional risk. That's the job of the regulator and supervisor, that you do not jump the gun and do not take excessive risks. The first stand is the board, which looks at the management and says the management is always keen to gallop in their enthusiasm. The board puts the first conservative break and say, no, I'm not sure whether you should do this or not. So in summary, the point I'm trying to make is, in the beautiful long history of Indian banking, one of the rarest in the world, where nearly 11 public sector banks had lived for more than 100 years, very rare, the trust has been maintained by the banks even before we got our independence, even before the Banking Regulation Act was done, even before nationalization took place, and even before Basel norms came into existence. So the Indian banks have really been very, very trustworthy. One odd cases here and there, because they are so rare and few, they get outplayed into the media in a big way, but that doesn't deter the depositor in coming and putting the money in the bank, because the inherent faith that the depositor has that the Indian banking system is very safe. Thank you.
So, Mr. Tamal, do you also think it is the inherent faith, or it's like no alternative choice?
Yeah, quickly. Before that, I just put one line about your fintech versus bank. Fintechs cannot replace the bank for as I said, they are doing a phenomenal job in the payment space, and they will continue to do. But to do independently, one is, of course, the how do you create trust and get the liabilities, etc. And second part is this, the regulations. RBI regulation is a very different thing. Once you ask a fintech, they will know what is the regulation, what is regulation. So it's a completely different ballgame altogether. So that's a separate story. As far as trust is concerned, is very relevant. For your information, since 1991 liberalization, there is not a single scheduled commercial bank has been allowed to fail. There are failures and people lost money, but that's all in cooperative banks, not in any scheduled commercial bank. That's point number one. Point number two is, yes, banks are very, very specialized enterprises because they are dealing with public money, depositors' money, which is why you will find that always, whether it's a spectrum or coal mines, the license are sold to the highest bidder. But for banking, there is nothing called bidding. Now, there is how much money you need to bring in, all are on the same part, and then the fit and proper candidate gets it. So RBI has its checks and balances, but then there are accidents, and or you can call it Reserve Bank of India's misjudgment of Rana Kapoor and whatever. In some cases, the promoter, in some cases, the in some cases the management, and of course the board also has not been playing a role. And what interestingly your students also should know that in the past 2 years, since 2018 and till recent before COVID, there are at least 3 or 4 occasions when Reserve Bank of India had to come out in media, either through social media, tweet, or through press release, that banking system is safe and stable, which has never happened before. Only once in 2008, post-Lehman crisis, about one particular private bank which had a very small exposure to Lehman, but there was some kind of misunderstanding and it was running the risk of people withdrawing money. RBI came out with a press release saying that this bank is safe. But in the past 2018-19, those releases are about the system. RBI said the system is safe. And on one case, RBI and SEBI, both of them issued a joint release. The system is safe. So you it's very rightly questioned. We are in a situation where actually people are probably losing trust in the banking system, which is why you have seen that DICGC deposit cover has been risen from 1 lakh to 5 lakh. Which is why RBI and SEBI coming out and saying trust the banking system. So these are the externalities we are seeing. But as I said, not a single bank has been allowed to fail. So be rest assured. And I think if you are a customer, you need to choose one category of bank, like for instance, cooperative banks, which governance is generally an issue. But that's an exception in the other part of banks. Governance is generally not an issue, but in certain over-exuberant, whatever, promoter or certain CEOs created problems. So I don't think we should lose trust in the bank. I mean, overall, and since then, Reserve Bank of India has tightened its supervision and regulation continuously. I've been saying and all. So we should not be scared about this. Financial sector stability is intact. There are odd cases, and I think RBI is tackling them. Probably a little delay, not as fast as we expect them to do, but they have their own other issues also. So that's it.
Thank you, Mr. Tamal. And I would now little rephrase the question for you, Mr. Vetri, on the same lines. But so yes, the gentleman told about the trust, and that is intact. So bank means trust, and another word which comes to my mind or any common person mind when they hear about bank is money. And the new form of money, a certain set of people globally is considering Bitcoin, and they want it to establish. So, Mr. Vetri, do you think that somewhere globally, certain section of people are not ready to trust bank anymore? Because at the end of the day, they are not allowed to fail, but they are not allowed to fail on the cost of other taxpayers' money, which is coming from either through SBI or through the government here in India, and similarly from Fed taking decisions in US to bail out these banks on the cost of other taxpayers' money. So how do you see at it? One of the most successful entrepreneur, Elon Musk, have recently spoken in favor of Bitcoin, which was even a shocker for me. But then that's what's happening. So how do you see at it, sir?
So I'm not an expert on Bitcoin, but let me put it very simplistically. I think the greatest value of a currency lies in its stability, right? It lies in its ability to transact, knowing that it has a stable value. When you look at it from that perspective, Bitcoin is not a currency. It's actually more like an investment asset. And I think what it has done in the current digital sort of arena and context is actually replaced what we typically thought was a asset class, which you could literally hide with you. You could put it under your pillow. You could hide it in your garden under a tree, which is gold, right? Secondly, Bitcoin, I don't know if you all are aware, the program allows for only 21 million coins. Now, I mean, how can you have a system of currency where it is limited by mandate by the program that there can only be 21 million? And I think finally, to me, where Bitcoin cannot play the role of a currency is that in some senses, it involves a loss of sovereignty on the part of countries, on the part of governments, and on the part of central banks. So I think it will stay in the domain of being a unregulated or perhaps a lightly regulated investment asset class, but not as a mainstream currency. We should also not forget that the biggest use of the Bitcoin is actually for transactions on the dark web, right? If you are trafficking in gold, in drugs, uh, all kinds of illegal activities, this is the chosen form of currency. So we have to be careful about what has actually become the biggest bearer bond of our times. And I think it's a matter of time before you start to see regulations come down. Finally, the beauty of Bitcoin lies in the blockchain technology. And I think the blockchain technology will go mainstream because it is a fantastic technology for maintaining what people call a distributed ledger.
So I 100% agree with you, Mr. Vetri, and this is what I also think. This is what I propagate also wherever I have been asked about Bitcoin. But the only thing is, when I see surprisingly that in India, people like Amitabh Bachchan promote it, and worldwide now even Elon Musk is promoting it, which surprises me a lot. I don't know what is the hidden agenda behind that. But why I asked you this, because of only one thing that we were discussing about trust, and what I wanted to highlight that either they are maverick people who are saying that Bitcoin should come and the authority of bank should go away, or whatever it is. I don't want to make it a Bitcoin discussion for sure, but yes, certain section of the society don't trust bank. This is what I also feel. But thanks a lot for all your opinion. And we have some questions from the students now. Some very good question. And one question is how to differentiate between good bank and a bad bank. So it's open to all three of you, whomsoever want to pick it up. Let me read the again. How to differentiate between good bank and bad bank. So Mr. Tamal, probably you can spin and
Yeah. Quickly, my understanding is this banking, a good bank is a boring bank.
okay.
Banking is a liability business. We need to understand that. What does that mean? As a bank, I need to keep my cost of money low. And if I can keep cost of money low, then I can have a good spread, which is called net interest margin, uh, 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 and get the best of customers. To give you an example, if my average cost of money is 4.5%, I can give loan at 7.5%, which is 3% NIM, and get all AAA rated customers, meaning my assets are safe, almost safe. But those banks which offers me more, say, and they charges more interest to their borrowers, and those borrowers are not AAA rated, not even AA rated. So they are again keeping high margin, but then it's a high risk, high margin business. So banking is primarily, Dr. Charan Singh is an authority on this. You'd be a better person to say. My layperson understanding is this: banking is primarily a liability business. Those banks who takes care of liability first and then build on the assets accordingly, they are better banks. I will not name them because I don't want to advertise from anybody. And secondly, and more importantly, is this: banking is a very boring business. If you want to cry on the rooftop and start telling, I'm doing this, I'm doing that, I'm doing this, I want to become like a Chinese bank, I look for scale, etc., etc. Actually, these are all recipe for disaster. You should do your very ordinary things in a very ordinary way with extraordinary execution capability. Outside world does not need to know that. This all happens to back.
Thanks again, Mr. Tamal, for the candid reply. And the next question is, sir, in your opinion, which global trend will shape the world economy in next 10 years? Mr. Vetri, if you can answer this.
Sorry, can you repeat that question?
Yes, sir. In your opinion, which global trend will shape the world economy in the next 10 years?
That's a very hard one. Trend. Well, I think the two trends which are very, very clear. One is the whole trend towards digitalization. And I think that's reasonably well known. So let me talk about a trend that increasingly I'm seeing more as an investment manager. And I think it matters from the point of view of capital provision, which is essentially the increasing focus that capital providers are bringing on what we popularly call as ESG factors, which is environment, social, and governance factors. I think this is one trend which is completely reshaping the way we think about evaluation of profitability of a company, the way we think about the external costs imposed on society by the operations of a company, and eventually the way we then start to evaluate the cost of capital that that particular business that we should apply to it, the kind of cost which should be imposed on the business so that it is responsible for the environmental and societal impact it is having on businesses. So to my mind, while today we think of ESG as a subsection of investing, I think over the next 10 to 15 years, actually ESG will just become part of the normal investing process, and nobody will be taking investment decisions without thinking about these three issues. How is this company governed? What environmental impact is it happening? Is it having? How is it trying to reduce its environmental impact? And what positive contribution is it making to society? In a way, we have moved away from the model of pure shareholder capitalism, which actually was my default setting for pretty much all my career. But I can see this transition now coming from the point of view of capital providers.
Thank you, Mr. Vetri, and I'm sure that students would like to hear you more, would like to invite you for a lecture in their college. You both are in Bombay, and they will do this initiative so that they can learn more from you about your industry. Many people aspire to come into that asset management industry, and it will be great pleasure for them if they hear out more from you. Well, teachers always have a supreme place in our society. We have last 7, 8 minutes left in this panel discussion. So I would like Mr. Charan, Dr. Charan, to chip in and say a few words to these students, not only about how to shape their career, how they can help our economy make 5 trillion economy, what are the contribution they can do, where all they can aspire, and what is all there in future for them. So, Mr. Charan, no questions, whatever you can speak, you want to speak as a professor of one of the MBA college itself to these students. This is how I would like to conclude this panel discussion.
Thank you very much. Again, I've learned so much from my co-panelists. Very, very interesting. I totally agree with Mr. Tamal. What is a good bank and what is good banking? If you look in the history of banking, banking history starts about 1100 years ago. And before that, it was money lenders. And money lenders even survive today. How do they survive? Do they advertise? No. They're just good in their own business. They have the risk assessment. They live in the same town or village or same locality. Their children go to the school of people to whom he has lent. His parents also go in the same park for a walk. Totally safe. So, good banking is quiet banking, silent banking, but robust banking. That is what is required. And that comes these days in modern times from the board and the management. If you have the best people there who are not interested in popularizing or predict politics, they can do very good business. Just do good business. And there is enough. And in Indian banking, which is thousands of years old, of course, in Venice, the first brick and mortar branch came, a transition from the money lender. If you look at the word bank, it comes from the Latin word bench. Bench means a place where you can sit. So earlier, there used to be a marketplace and the money lender will sit on a bench outside the market. Anybody who wants to go and do trading, make quick money, goes in, borrows from the money lender, on return pays him the interest and the principal and goes home making some profit. Once you put the walls and doors around that bench, it became the modern bank as you see it. So therefore, banking business is a conservative business, good solid risk assessment. But in India, we have had banking business for thousands of years. If you look at the literature and you look at the scriptures, it is true, many may not be comfortable, but the different rates had been prescribed for different castes. Brahmin would be charged 2%, the Kshatriya 3%, and so on. On an average, if you took loan for a year, the average rate of interest was 15%. If you are giving loan for exports, I think it was 120%. If your goods were moving through the forest, I think the rate of interest was 240%. Dr. Y.V. Reddy's speech has it all documented. So Indian banking history is far richer and longer than anywhere in the world. And we have survived various things. We have survived the partition. We have survived the World War. We have survived the Great Depression. We survived the Asian crisis. We survived the 2008 crisis. Beautiful banking history we have. We only don't celebrate. We only look at things which are alien and Western. We do not understand that within our country, we have the richest tradition sitting here, and Indian banking is one of those rich traditions which we need to celebrate. So let's be proud of our Indian banking system. You asked a question, which are the best 10 which will lead the trend in the global economy? Let me tell you, there is only one and only one. Today, this is the country, irrespective of political powers and political ideologies and people in power, irrespective. This is a country which has very young population. This is a country which has a fabulous regulator in SEBI and RBI. This is a country which has two beautiful stock exchanges with more than 5,000 listed companies there. If you ask me, the next 50 years belongs to India. This is the trend. This is the trend. India will set the trend for days to come. And the last thing that I want to mention, do you have time or should I close?
So, sir, how I would like to close it, like some of these students are going to be the future banker. Some of them are going to be the future entrepreneurs who are going to do this disruption through fintech also. So maybe last 1 minute from each one of you to any message from your side which you would like to give to these students. 1 minute each for you, because we are just have 3 minutes now. They are scheduled for another events at 12:30. Any message, sir, for the
So
future?
I would simply in the last 1 minute say, just be confident of what we are. Let's look at our Indian traditions. Let's look at the world and see what we can do to improve if there are any lacunas and gaps in which we identify in our own system. Just be proud of being an Indian and contribute. The last thing I want to say is India was very rich and private entrepreneurial activity was at the prime. We need not worry and fear privatization. The whole country has to move on, and therefore every individual has to make an endeavor to take the country forward. Thank you.
Many thanks, sir. Mr. Tamal, any message from your side for the young generation?
Yeah, no message. I'm not qualified, but three things I would like to point out, not necessarily in that order. Use your common sense for whatever you do, and do whatever you like. Don't just go for money. You do whatever you like, money will come. Money is the byproduct of whatever you do. You just love the thing and do. Otherwise, in the morning you'll say, "Oh my God, I have to go to office." Don't do that. You enjoy, and then money comes later, byproduct. Number two is never ever compromise ethics and governance. Be whatever in the banking, in finance, in fund management, in wherever you go, never ever compromise governance and ethics. You will be caught one day. So it's not a long-term game. And finally, that should be my actually first thing is this. What you are learning in your organization is the basic discipline, but actual learning comes after you get out of it. In that sense, the classroom is the outside world. And just for your information, I do not have any background of finance. I'm an English literature student, but it's just out of curiosity, I learn things from outside. So that's it. I think classroom, don't go by only classroom. Classroom was only the beginning. Actually, the entire world is a classroom.
Probably boundaries are not made for a few people, and you are one of them, Mr. Tamal. So we are highly privileged. Thank you. Anything you want to share, Mr. Vetri, from your career or anything, for the young generation?
Yeah, sure. So I think the point that I would make, and I've largely been on the corporate side, but I've also been an entrepreneur once in my life, and it didn't work out very well. So I would say, if you are the risk-taking type and you want to be an entrepreneur, don't worry, take those risks. And if things go wrong, there are always new opportunities available. I think fear of failure should never hold you back from doing that. When it comes to growing your career, I think unfortunately the sort of image that people have of your career is that of a ladder in which you have to continuously go up and you have to make sure that nobody else is on the ladder with you. I would actually think of a corporate career not as a ladder, but more like a tree where you not only take in the what the environment has to provide you in terms of the water, the sunlight, and everything else which is in your environment, but you also give back to the environment, those who work with you, your team, your customers, your shareholders, your stakeholders. So I think that is the context in which anybody needs to think about their career, and that's the message that I would give people.
Thank you, Mr. Vetri. That's a very, very valuable advice for people at this juncture. So that's all, guys. And I think we are done for this discussion. Thank you, Adya. You are back. So take on from here.
Thank you, sir. I would like to extend my sincere gratitude to our distinguished guests who took out their precious time and blessed us with their presence. Mr. Kundan Kishore, sir, thank you so much for moderating this session. We are really glad to get so many perspectives on the different agendas. We are truly honored for your presence, sir. I also like to thank all the delegates for being a part of the Global Youth Economic Summit and help us make it a great success. We end the sessions for today by this powerful panel.
Thank you. Stay safe.
Thank you. Thank you, everybody.
Thank you.
Stay safe.
Yeah, Adya, please go on.
Delegates, the networking lounge is active. You have the options of a video chat as well as text messages to connect with other delegates. We hope to see you tomorrow with more enthusiasm and excitement. Thank you so much.
Thank you, everyone. All the best.
Thank you, sir.
Thank you.